Hello, everyone, and welcome back to Southern Wealth. I hope you're having a wonderful Sunday. If you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel. And as you know, Sunday is the day for a bit more macro discussion, a bit more bigger picture kind of discussion. Now, I only do this once a week because I do believe it's important to understand what has happened in the past few years, what is likely to happen in the future, but I don't use that as short-term indications of anything to buy or sell anything. But it's important to understand where certain parts of the globe are evolving as a as a as a as a total, and basically see if there's adjustments that eventually will need to be made, either to where to live, why moving to certain places, these kind of things. Okay, and the thing that I would like to flag is basically what's been happening to the West in the past. I would say, particularly the past 15 years, but also before that. So you see, and when I say the West, I'm not just talking about looking at the planet divided to this side and that's it. I'm talking about Western Europe, Canada, US, United Kingdom, Australia, New Zealand. I would say to some degree Japan, South Korea, these kind of countries, but less than the others. And the thing is, those countries have been the best place to live over the last 250 years. Now, in case you don't know, these things are not always the same. There is actually a typical 250-year cycle in which certain places to live in the world shift to other regions. So, for example, in the 5th century, century number 5, the best place to live in the world was not Europe. It was actually Baghdad in Iraq. Then during the Dark Ages in Europe, China and other parts of Asia were much better to live in than Europe. And in the last 250 years, I would say the best places to live have been, there are exceptions, but overall, Western Europe, North America, excluding Mexico, Australia, New Zealand, these kind of countries. But we are approaching at the end of the 250-year cycle. Now, very importantly, because people always get this very confusing, okay? When I say a cycle, it doesn't mean that, okay, now it's year 250, now these countries are going to collapse completely, and these countries that were not doing much are now way better. In one single year, everything changed. No, these things take a certain path. And invariably what happens is collapse of currencies, weak leadership, too much accumulation of debt, high inflation, bad policies that eventually take out your big advantages, and other countries start to get infrastructure technology to the level that you used to have. Now, all these features are happening in other places of the globe. I would say maybe in the future, places like Singapore, places like Thailand, Vietnam, Dubai, Saudi Arabia, Qatar, maybe those places will be better to live than Europe or any others. And looking at the past 15 years, what happened is actually quite clear, which is democracy as an issue, which is, and particularly when we moved out of the gold standard into the fiat currency system, is that governments cannot resist printing money in order to make a recession look better. So that's exactly what they did. But it got to a point where by printing money, you are incentivizing riskier and riskier behaviors. Why? You print money, you lower interest rates. Now, safe, prudent investments get you less money, but you still need to make money. So you go for riskier and riskier stuff, like the mortgages in 2005, 6, and 7, which then led to the global financial crisis. What Europe and the US did was, okay, let's just print money and hope that things go away. That was the approach. You see, the reason why they didn't improve is because Japan did the same thing in the 90s. And what you need in capitalism, you need success and failure. And when you have too much artificial success, you need a big failure to compensate for the success that you didn't deserve in the past, which obviously we didn't allow it to happen. Same thing happened in Japan. The Tokyo real estate market went crazy. The Japan stock market went crazy. Everybody was agreeing that Japan was going to overtake the US and Europe, and we were finished regions, blah, blah, blah. A little bit like China nowadays. Same stories, same narratives. And of course, then Japan collapses. Now, Japan could have bitten the bullet, have huge recession over 3 or 4 years, talking about Great Depression levels. But now they would be a much stronger country. Unfortunately, they opted by printing money and buying government bonds. So they have an average growth of 0% over 30 years. The real estate market dropped 60% and never recovered. The stock market we still didn't put in new all-time highs versus the 90s, versus 1989 actually. And basically half the population goes bankrupt if they have a child, and they have an average growth of 0%. So it's a dead economy. That's the price they pay. We've done the same. So that's why when we started printing money and stimulating the economy, you see, you need to be careful because governments use nice words that go into your brains and make you think it's a positive thing, like quantitative easing. Easing, oh, easy. Yeah, everybody likes things to get easier. In practice means print money, but they know print money is bad. So you call it quantitative easing. You call it stimulating the economy. Everybody wants to be stimulated, right? So they use these nice words to make it seem that it's much better than in reality. And what happened? We had 2008, and we had the slowest recovery coming out of a recession that we've ever had. Why? Because we're doing the same thing as Japan. If you don't allow bad companies to go bankrupt, if you don't allow prices to reset, you will lose productivity because people are employed in companies that should not exist. And the more you do it, the bigger is the problem, which means that's why QE1 was one size, QE2 was bigger, QE3 was bigger than 1 and 2, QE4 was bigger than 1, 2, and 3 combined. And what we did in 2020, 2021, we printed about 44% of everything we printed before. But that's the point. It goes like this, like a hockey stick. Now, the issue is that people thought, oh my God, this is going to create huge amounts of inflation, which I don't know why people expected it, since Japan already was doing it for almost 20 years with no inflation. You see, depends on the inflation you're talking about. So, financial assets, bonds, real estate, stocks, all-time highs. The inflation on those assets was brutal. Actually, if you look at the money supply in the US going up and you look at the S&P, they match almost 100%. What that means is that financial assets, ownership of a house, ownership of a company became very expensive. So you had, if you will, hyperinflation on that. Consumer prices, not so much. Why not? Who owns stocks, real estate, bonds? The top 20% own more than 95% of all of these things. But they are limited in their spending. Like if you have 5 houses, 3 yachts, 4 cars, or 10 cars, you go on vacation 4 times a year. I mean, how much more can you actually spend? There's a limit. And what kind of stuff are you spending? Like, if you're spending luxury goods, I mean, they are not being produced like there's no tomorrow, correct? So, what happened to the average Joe, the bottom 80%? Because they were already with very high levels of debt prior to the stimulus, they don't get that much access to new debt because banks don't lend them money. You see, a bank will lend infinite money to Bill Gates, but it will not lend infinite money to actually someone that needs it. And it's very simple. Banks, before they look at return on capital, they look at return of capital, of money coming back. If it goes to Bill Gates, 99.9% it will come back. If it goes to a guy who's already extremely indebted, cannot keep up with a secure job for long, got fired multiple times, blah, 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 etc., that person is much more difficult to get the money back. So, those people, if they have access to that money, but they don't, because they're already a lot indebted, then you would have inflation in the consumer prices, in things that everyday people buy all the time, groceries, gasoline, clothes, whatever. Those things would go up in price. Now, why was this time different? Why did we see 9% inflation? If you want to look at different methodologies, some people said almost 20%, whatever it is. Because we printed 44% of the entire QE before it. We printed about, so you have the dollar was created, right? And in those 2 years, 2020, 2021, about 60% or 70% of all the dollars ever created were created in those 2 years. So you have a bunch, like a brutal stimulus that you've never seen before. Then you tell people to stay at home. Stay at home. Don't produce. Don't increase the supply. And by the way, at the same time, we're going to give you a bunch of cash in your hands to go buy stuff. So the demand actually went higher, supply went down, and a lot of money was in the system. And the best we got was 9% inflation for a month. That's it. And now we are actually reverting back, because as supply chains came back online, as people start to produce stuff, as people stopped to spend so much money, then things started to stabilize. But still, we had a massive conflict. We lost the third largest oil and gas producer in the world because we could not trade with them anymore. And we lost the fifth largest agricultural powerhouse in the world because it was invaded. Meaning fertilizer, food, much more expensive, energy prices go up. Energy touches shipping, transport, petrochemicals, fertilizers, food, greenhouses, medical equipment, you name it, it touches it. So you have high inflation. But still, you don't have that high of inflation. The reason for it is the majority of the money stays with very wealthy people, not in cash. It's not like they're spending it, but it ends up going in assets. It's very simple. If you create $1 trillion, now there is $1 trillion that didn't exist before. You are a very wealthy person. You have access to that $1 trillion. You already have everything. What do? Okay, let me buy real estate and rent it out. Let me buy stocks. Let me buy maybe bonds, so I get a X% every X years. That's it. That's how you can print money for so long. Productivity tanks because people get employed in jobs that shouldn't exist. Inflation actually goes down because the consumer price one, the one that we look at, goes down. Financial assets go up because money needs to go somewhere. Rich people have access to all that capital. Poor people barely. So you don't see the bad inflation, you see the good inflation. If you change the dynamics, like cutting supply by telling people to stay at home, or by increasing brutally the demand by giving the thousands of dollars to people to spend, and then supply chains break down, then you have a conflict starting between two very important resource-based economies, then you can have higher periods of inflation. But still, and this is the mistake, the Fed raising rates, thinking that it was their money printing that created the inflation in the first place. It was not. It was basically saying people to stop producing but still keep spending the same or more money. Supply and demand. That's all it was. So that's why you'll still gonna see it coming down eventually. And maybe we stabilize a bit higher at 3%, 4% inflation. Why? Because over the last 150 years, I think we had inflation below 2% 7 or 8 times. So I don't know where this notion that 2% inflation is normal. It's not. That happened like 7 or 8 times in 150 years. So in any case, I think this is one of the most interesting topics. I hope you guys enjoyed it. If you have any questions, drop it in the comment section. And thank you very much for your support. See you later.